Hello, hello, hello. We are live here in Arizona. Hey, everybody. Happy Thursday, right? Yeah, it's Thursday. Uh, as you guys know, when you're a business owner, you lose track of the day, the time, everything, because you're constantly moving and moving and moving and moving and making things happen. So, I am Daryl Johnson, founder of Business Credit Works. I'm here at the Phoenix location. And just I'm a snowbird for a little bit. We've got a Kansas City location. It's always going to have a Kansas City location that is home base. That's where mom is. So we're always going to be there. But we're branching out and here in Phoenix, Arizona. And for those of you who don't know me, I used to live here for 20 years, about probably 8 years ago. And just looking at retirement, I can't believe talking about retirement in a couple of years, but wanted to get out here and get a footprint here for the business. So today's topic, I've been going live talking about different topics and sharing with you guys. I hope you guys are finding value out of this and being able to share and communicate to other business owners about this information because I really make a conscious effort to make sure that I'm giving good information that has been researched and vetted to ensure that the community is getting the proper knowledge it needs to grow and expand their business and to start having those banking conversations. Let's just say lending institution conversations when you get to that place where your business is scaling and growing. So today's topic is what's needed to get an SBA loan. And I'm kind of an SBA fanatic because they're typically are the best rates and best terms that are available on the market. And they've got a just a boatload of products that they can offer a business owner also. So I'm going to get the presentation set up here, and we're just going to talk about what's needed to get an SBA loan. Let's share that there. All right. So as I said, today's topic is what's needed to get an SBA loan and the steps to getting one. We're going to touch upon that also. So it's not going to be a long topic. I don't want to keep everybody because I appreciate everybody jumping on in the middle of the day to get this information. So what the SBA does, it doesn't actually loan money. Instead, they set what I always say, and you guys will hear me say, underwriting guidelines. Because the SBA guarantees these loans, the rates are more favorable terms and more flexible. But the SBA says real estate investing, for example, is too high risk for them. But they've got some options. So, but just know that the SBA does not actually loan the money. They set the guidelines or the rules for the lending partners to adhere to. And as I said before, the rates are more favorable and terms are more flexible because they're setting the rules of the game, basically. This is the rules on how to apply for an SBA loan and get the funding through an SBA partner. Not every company can qualify for an SBA loan, but those that do just know, or those that want to, just know there's a lot of paperwork involved. But the heads up, there is a difference between a lending institution that offers SBA products um, and then an SBA preferred lender. An SBA preferred lender basically means they know the guidelines at the back of their hand. They've done so many of those deals that they can pretty well underwrite that file in a lot less time because they're familiar with the rules of the program, whereas some SBA partners are just offering the SBA loan program to their platform and to their clients. So there's a difference between a preferred just means that they just know the guidelines and can process that file a lot faster than a SBA company that is offering the services, the financial institution that's offering the services on their platform. But it's not their primary bread and butter per se. Okay, so those are differences. Preferred lender, pretty much bread and butter SBA loans, and then the non-preferred lender, they're offering that they can do SBA loans, but it's not their mainstream. Okay. They have various cap lines and loan programs. And basically, they have varying loan programs. This technology or terminology here. The SBA, as I said, their lending partners actually make the loans. Remember, I said that preferred lending partners, which means their bread and butters pretty much SBA products. And then the non preferred, they're offering SBA on their platform, but it's not their bread and butter. So the processing time might take a little longer. The other thing I want to make you guys aware of is I'm a processor. So I processor, underwriter, short sale negotiator. I've got a vast array of time in the lending space. So I look at things from a processor, underwriter, lending perspective, where we want to give that underwriter and that lending institution as much positive financial data to measure credit worthiness, whether it's with a business credit score, a strong personal credit score, or even our books in order. Okay, so my look at the back end of it, since my experience has been in operations for basically 20 plus years, is I want to be able for you guys to walk into any lending institution and have your I's dotted and your T's crossed, and that underwriter is going to love your file because they have signing authority. And when it comes to your file, it should be like grading a paper and it makes sense. You've got letter of explanations. If you've got had a bad year or so with a credit, life happens with our credit, personal credit score. You can have a letter of explanation that's explaining what happened. And that's where the salesperson is really going to package your file up and basically have that underwriter just be able to grade a paper, have all the necessary documents to where the snapshot of your file, it makes sense, and there's supporting documentation to validate what you're telling the loan processor and the underwriter. Okay. SBA also does research grants. So that's good to know. I didn't know that. That's good to know. This is a big one. The SBA, some of their products, I should say, uses what's called a small business scoring system. The scores reflect the likelihood of it says applicant, but of a business paying their bills timely. The scores can range from zero and go all the way up to 300. The higher the score means the lower the risk. So it's opposite of what we're thinking. The opposite of what we're thinking, the higher the score means lower risk. The higher score you have, the better. Personal and business credit history plus financial data go into this calculation for this SBSS score. Your personal credit, your business credit, plus your financials go into that total score calculation. And as I always say, the money rules, i.e., the underwriting guidelines change all the time based on the market. Okay. What they might tell you today are the rules might not be the same in 3 months or 6 months because they're constantly ebbing and flowing based off the market. For the SBA loans, you will not be approved with a score under 140. Remember saying that SBSS score is a combination of your personal credit score and your business credit score to come up with that 140 range. Okay. And 140 is what's required by SBA. And then their lending partners will sometimes put what's called a an override. The override will say, well, yes, SBA wants a 140, but here we're looking at a 155 or 160 SBSS, Small Business Scoring System, credit score. Okay. So this depends on where you're going. SBA itself, 140. However, it could go to as high as 160. Anything below that, you're going to be denied because you're too high of a risk. First thing that SBA institution is going to do is going to pull that score. So if your score does not meet their threshold, 140 to 160, chances are you won't even be submitted to SBA because you don't meet the credit score requirements. A lot of times they don't tell you how to uh, get your that SBSS score up or tell you how to get business credit. It's up to you to find out on your own those sources and to figure out how to work to get those scores up. But as you know, business credit works. That's what we specialize in, is in business credit. And we have our partners that also does the consumer side. So we can work with you on both sides to get that score up on both sides, the personal and the business. Therefore, your SBSS score is going to increase also. SBA loans, you usually need to show some time in business. The most popular one for working capital is a 7A. Remember me saying they have a lot of loan programs, and they really do. And approvals for the 7A are up to 750K. And this might be a little higher now. I don't remember when this slide was made. The rates are usually 2 to 4% above prime. And all owners with more than 20% ownership must provide a personal guarantee. So that's the threshold for them. All owners with 20% or more must provide a personal guarantee. SBA, you're rarely going to not have to personal guarantee an SBA loan. It does happen, especially after they get to know you for a while. You got a good history with them. But just know, chances are you're going to personal guarantee the SBA loan. And good consumer credit is required. And that is true. If you do not have that SBSS score for some of their loan programs, they will look strictly at your personal credit. So the better the personal credit is, the more chances you are getting approved for an SBA loan. This is a 7A. And you must demonstrate a need for the funds, have a sound business purpose in mind, okay, and meet the SBA size standards and be considered small within your particular industry. Most important, you have to be a for profit and must have reasonable equity to invest. They want you to have some skin in the game. So that's why they're asking reasonable equity to invest. And remember, this is a government program, guys. So they're going to ask you for some equity, a good business, or good personal credit score, because it's, I don't want to say it's like a traditional bank underwrite, but it's pretty much like a bank underwrite. They really want to ensure that you, the business owner, has all the I's and T's dotted and crossed to ensure they get their funding back because they're guaranteeing the loan. Remember, SBA does not make the loan, they guarantee it. So if you should default, what do you think happens if you default or go under and SBA has guaranteed that loan? You got it. You got it. They have to eat that. So SBA in this case is, you can think of them as the insurance company. It's insurance for that particular lending institution that for whatever reason, if you do not make your payments, SBA will step in and say, "Hey, we got this. We got this. We'll take it over." A company must do or propose to do business in the United States, of course. The company must have tried to use other financial resources. It includes personal assets, bootstrapping before applying. They want to see that you've exhausted all resources before going to an SBA lending institution. But to me, this kind of is backwards to me. I don't want you to come to me when you have bootstrapped and you're broke. Because chances are, if you are bootstrapping it, we're using our own personal credit, our own personal assets in the bootstrapping scenario. So I wish they would change this to come to them before you start bootstrapping and using your assets to get that. And there's some gray. There's always going to be gray area in lending, guys. It's not hard, fast. These are the rules. If you do not do them, do not pass go, do not collect $200. There's always some gray when it comes to underwriting. Okay. The 7A program allows for loan amounts up to 5 million. Funds startup costs, buy equipment. It's a great program. A company can use to buy land, repair existing capital, buy or expand existing business, refinance existing debt, buy furniture, fixtures, supplies, or materials. This is all used in the 7A program. Okay, did I miss one? Flexibility, longer terms. So terms is just the time to pay the bill, to pay the loan back. So typically, when you get into the commercial side of things, the term when it comes to business lending is shorter than what we're used to, like for our homes and for our cars. They're a lot shorter amount of time to pay the money back because business is very risky. So, from a bank's perspective or lending institution's perspective, the longer you have that loan out, the riskier it gets because the market dictates, especially certain industries, what is good and bad in the market. And we know COVID, service-based businesses, definitely showed that crack that service-based businesses just got beat up, unfortunately, when COVID happened. Members of the military community and those looking to meet short-term and working capital needs is great for that. Most loans are repaid with monthly payments of principal and interest. For fixed rate loans, the payments stay the same since the interest is consistent, but you also have variable rate loans. A lender can require a different size payment amount when the interest rate changes. So the interest rate resets, that's going to make your loan higher, okay, with a variable rate as opposed to a constant fixed rate. Your payment stays the same. The amount that you pay on the principal and interest is going to stay the same. According to the SBA, the umbrella for the program are capital lines. SBA helps business owners meet short-term working capital needs for loans that go up to 5 million. And the loan qualification, this is the SBA Capline program. Same as the other SBA program, loan or revolving are available. Um, so the overall guidelines for the different products that they offer are pretty much the same. It's just what the particular product is doing or designed to do. Like this cap line, it's a seasonal line, advances against anticipated inventory, accounts receivable, or even seasonal business. You got a builder's line. That's meant for general contractors or builders constructing or renovating commercial residential properties. Then you have your standard asset baseline for businesses unable to meet the credit standards associated with a long term credit Financing for growth, reoccurring and or short-term needs. Repayment is from converting short-term assets into cash. Okay. Then the small asset baseline. Asset-based revolving line of credit up to 200K operates as a standard asset base, except for the stricter servicing requirements are waived if the business can constantly show repayment ability from cash flow to the full amount. I know that one's a lot in there, it's a lot for me, but just this is high level just to make you guys conscious of what's out there for SBA. It's not a deep dive, very high level, and just making you more aware of the SBA loan products and programs. SBA Express, they do offer that. It's a faster means of securing an SBA loan. It may go up to 250. The rate can be 2 to 4% above prime. It's also available as a Community Express for low and moderate income entrepreneurs. The SBA Express is a credit line to well qualified borrowers. Loans over 25K will require collateral. For approval, you will need your balance sheet and income statement, accounts receivable, collateral, your articles of incorporation, of course, contracts with any third parties, a lease, okay? SBA 504, move to this program. It's the SBA's second most popular loan program, often used to buy land, equipment, or real estate. The bank funds the loan. SBA generally guarantees up to 40%. You can usually get a loan up to 1 million. Typically, you contribute 10% of the equity. You must operate your business for profit with a business plan and relevant management experience. So they are going to look at your management experience in your business to see if you've got the history of managing the type of business that you are in. Has been in the United States, other financing, bootstrapping. Like I said, the guidelines across the board for SBA are pretty much the same. I just don't like that you've got to bootstrap and try to other companies. You actually have to get denied first and then go to SBA to get a loan potentially. Okay, your net worth under 15 million. Business must be able to repay the loan on time, of course, and that's from its projected operating cash flow. For land and building, the term, long loan term, is 20 years. It's a 10-year term for machinery and equipment. So any machinery or equipment is 10 years term from that. 7M is their micro loan program that goes for loans up to 35,000 for working capital and growth. The average loan is about 10,000. That comes straight from SBA. It's unlike the 7A where funds come from the bank. This is coming directly from SBA. Their microloan program is designed to be a short-term loan up to 50K to help small businesses start up and expand. On average, about 13K is the average. And SBA uses, like I said before, the various lenders have SBA products on their platform to be able to service the client. The nonprofit community-based organizations with experience in lending, management, and technical assistance. These intermediaries make loans to the eligible borrowers. The SBA, the 7M microloans, oh, those have to be paid in 6 years. So a shorter term. It can be used for working capital, buying inventory or supplies, equipment, fixtures, machinery, you name it. Okay. So that was what I wanted to talk about today, guys. Just high level, just making you guys conscious of the SBA loan programs, just some of them, and go into a little detail about the various ones. But SBA, like I said, it's a great program, but they have longer terms and shorter interests. So okay, so it's a great program. Sorry guys, I had a senior moment. But I hope you find value out of today's topic, what's needed to get an SBA loan. And as I stress all the time, the rules, the money rules change all the time. Where you go to get the money, for the most part, might have different underwriting guidelines. Underwriting guidelines are what I call just that, guidelines. They're not hard, fast rules for the most part. You've got some flexibility, but it also depends on that underwriter and how they're interpreting the documentation that you have given them to explain something. Okay. So please check out Business Credit Works. We've got some great programs out there to jumpstart your business building empire, because business building is a necessary tool in every business. I look at business credit as a tool that every business must need. It is not a get rich quick. It's not a hustle. It is a corporate tool that needs to be used as that. Every company in America leverages credit. And we want to be responsible with our credit when we get that business credit established, because it really is game changer in a business's life, especially as you grow and scale your business. Okay. So please check out our website. If you have questions, please make an appointment. We've got a Zoom option and a phone option on businesscreditworks.com. I'm Daryl, the founder of the company, and I'll be on again talking about some more interesting topics that I find interesting that I just want to share with the community, and hopefully you guys find it interesting and getting value also. Hey, Deborah, I hope you guys are getting value out of this. All right, we'll talk soon. You guys be safe out there. Have a good